Now, the next questions become, how do I actually move money from my corporation into an RSP in a tax-efficient way? So how do you fund your RSP from your corporation? Your corporation cannot contribute directly to your RSP. At least the way we're set up with our investment dealer, I cannot put money directly from your corporation to your personal RSP account. It has to go through your personal checking account first and then move to your RSP. So this is really important. And the takeaway from this part is that it's a tax neutral event. When you pay yourself a salary from your corporation, if you want to pay less taxes upfront, you can file a form T1213 that will reduce the amount of taxes you need to remit upfront. So you can pay yourself from your corporation to you personally a salary or a bonus, and then take that bonus and put it into your RSP. And depending on whether you've paid taxes up front or not, you may or may not get a tax refund. But the point is that it's a tax neutral event. You're literally just moving money from the corp to your RRSP. And if you didn't pay taxes when you move money from the corp originally, you're not going to get a tax refund once you've made once you've made your deposit. So again, it's just a tax neutral event. It's a way to take money out of your corp, put it into your RSP, invest it in a tax deferred basis for the future. The key point is that the RSP, your investment growth, is tax deferred versus that if you left it in the corporation, you would have been subject to annual taxes on interest, dividends, and any capital gains that you realizes. But when you eventually withdraw your money from your RSP in retirement, you're going to pay whatever personal tax rate at that point in time, because with your RSP, you lose the origin of the distributions, like I mentioned earlier. Everything gets taxed as income for that year. So the RSP is essentially a tax timing tool. You're using high income years to create deductions and your different taxation to lower income years. But I'm going to cover in another video the RSP versus TFSA versus non-reg. Even if you're contributing in a tax bracket and you're withdrawing in a higher tax bracket in retirement, which that's why a lot of people think that RSP is complete trash, because they think, well, my wealth's just going to continue to grow significantly. But even if that's the case, the RSP is still advantageous. And I'm going to cover that in a completely separate video. But now, to be clear, the whole point is that this needs to be properly coordinated. Your compensation strategy, your salary, your dividend, how much you're paying yourself, it's not something that you decide in isolation. It affects your CPP, your corporate tax, your personal tax, your RSP room, and your long-term retirement modeling options. So the big takeaways: first, the RRSP is not just an employee account. For business owners, it's a strategic tool to create personal tax deductions, tax-deferred growth, and retirement assets outside your corporation. Second, salary is the key. If you want RSP room, you need earned income, and dividends won't do it. Third, corporate investing is powerful, but it comes with risk, especially the passive income grind and potential pressure on the small business deduction. Your RSPs can help you reduce that risk by moving growth outside the corporation. So is the IPP. And finally, the best results come from the coordination. Salary versus dividend is not just a tax decision. It affects your CPP, your corporate tax, your personal tax, your RSP room, exit planning, and retirement withdrawal strategy. So if you're an incorporated business owner and you're not sure how to structure this properly, especially if you have retained earnings building up, you're nearing the passive income threshold, or you're thinking about retirement or a future sell, this is exactly the kind of planning that we do. Reach out and we'll build a compensation and retirement strategy based on your numbers, your timeline, and your goals. Because the goal isn't just to pay less tax this year. The goal is to design a retirement plan that works for your lifetime and minimize your taxes over your lifetime, not just in a single year. Again, thank you for listening and watching this video, and I will see you in the next episode. Have a good day.